Access to finance in small-scale farming. Title: Access to finance in small-scale farming, overcoming barriers for sustainable growth. Introduction. Small-scale farming plays a crucial role in ensuring food security, poverty reduction, and rural development in many countries worldwide. However, limited access to finance remains a significant obstacle that impedes the growth and productivity of small-scale farmers. This article aims to shed light on the challenges faced by small-scale farmers in accessing finance and explore potential solutions to bridge this gap. By understanding the barriers and implementing effective strategies, we can unlock the untapped potential of small-scale farming and promote sustainable development. Overview of small-scale farming. Small-scale farming refers to agricultural practices carried out on a relatively small piece of land, typically operated by individuals, families, or small groups. These farms utilize traditional techniques and low inputs, making them vulnerable to various challenges. Despite their size, small-scale farmers contribute significantly to local and global food production, employment, and income. Ration in rural areas. Challenges faced by small-scale farmers. 1. Limited collateral and credit history. Financial institutions often require collateral or tangible assets, such as land titles or machinery, to secure loans. Small-scale farmers, particularly those who do not have formal land ownership or lack collateral, face difficulty in accessing formal credit. Additionally, many farmers lack credit history, further reducing their chances of obtaining loan. 2. High interest rates and transaction costs. Even when formal credit is accessible, small-scale farmers often face exorbitant interest rates and high transaction costs. This can deter them from seeking financial assistance, as the cost of borrowing may outweigh the benefits of investment. 3. Lack of financial literacy. Many small-scale farmers lack basic financial literacy skills, such as budgeting, record-keeping, and financial planning. This hampers their ability to manage loans actively and present financial information to financial institutions confidently. 4. Seasonality and income variability. Small-scale farmers often experience irregular income streams due to seasonality and external factors like climate change. This poses a risk for financial institutions, making it challenging for farmers to access loans without a predictable cash flow. 5. This perpetuates a cycle of poverty and limited economic growth. Strategies for improving access to finance. 1. Strengthening financial institutions' outreach. Governments and development agencies should support the expansion of financial institutions' presence in rural areas. This can be achieved through targeted investments in physical infrastructure, such as bank branches, and initiatives that leverage digital technology to provide access to financial services. 2. These programs should cover topics such as budgeting, record-keeping, and investment planning. 3. Development of innovative financing mechanisms. Governments and financial institutions should explore innovative financing mechanisms that cater to the unique circumstances of small-scale farmers. Microfinance, peer-to-peer lending, and crowdfunding platforms are examples of alternative approaches that can provide accessible and affordable credit. 4. Encouraging collaboration and collective action. Small-scale farmers can form cooperatives or producer associations to pool resources and increase their negotiating power with financial institutions. This collective approach reduces transaction costs and enhances access to finance by providing a more secure lending environment. 5. These tools can protect farmers' investments and mitigate the risks associated with seasonality and income variability. Continuing from the previous content. Case studies and success stories can serve as valuable learning tools for addressing the barriers to access to finance in small-scale farming. By sharing examples of how different strategies have been and implemented successfully in various contexts, stakeholders can gain insights and replicate effective approaches in their own regions. One such successful example is the establishment of mobile banking services in rural areas. In countries where physical access to financial institutions is limited, mobile banking has proven to be a game changer. Through partnerships between banks, mobile network operators, and government agencies, small-scale farmers can now access a range of financial services through their mobile phones. This has not only improved convenience but also reduced transaction costs and increased financial inclusion in underserved rural communities. Another success story is the implementation of microfinance programs tailored to small-scale farmers. Microfinance institutions provide small loans and other financial services to individuals who lack access to traditional banking services. By understanding the specific needs and challenges faced by small-scale farmers, microfinance institutions have developed flexible loan products with lower interest rates and longer repayment terms. This has allowed farmers to invest in agricultural inputs and equipment, leading to increased productivity and income. In addition to these success stories, it is important to acknowledge the role of policy and regulatory frameworks in promoting access to finance in small-scale farming. Governments play a critical role in creating an enabling environment through supportive policies, regulations, and incentives. Furthermore, governments can support the development of agricultural value chains by investing in infrastructure, research, and extension services. While access to finance remains a significant obstacle for small-scale farmers, various strategies can be implemented to overcome these barriers and promote sustainable growth. Case studies and success stories serve as valuable learning tools and showcase effective strategies implemented in different contexts. For example, the establishment of mobile banking services in rural areas has improved convenience and reduced transaction costs. Microfinance programs tailored to small-scale farmers have also been successful in providing accessible and flexible loans. Policy and regulatory frameworks play a crucial role in promoting access to finance in small-scale farming. Governments can create an enabling environment through supportive policies, regulations, and incentives. They can also invest in infrastructure, research, extension services, and agricultural value chains to further support small-scale farmers. Continuing on from the previous content. To ensure the success of these strategies, monitoring and evaluation mechanisms should be put in place. Regular assessments of the impact of interventions and adjustments based on the results will help refine and improve access to finance initiatives for small-scale farmers. This will enable stakeholders to identify challenges, measure progress, and make necessary changes to ensure the effectiveness and sustainability of these interventions. It is important to note that addressing the barriers to access to finance in small-scale farming is not a one-size-fits-all solution. The challenges faced by small-scale farmers can vary depending on the region, specific context, and the characteristics of the agricultural sector. Therefore, tailored approaches and solutions are needed to meet the unique needs and circumstances of different communities. Additionally, building partnerships and strengthening the collaboration between various stakeholders is crucial for the success of access to finance initiatives. This collaborative approach will help create synergy and ensure a comprehensive and integrated response to the challenges faced by small-scale farmers. Achieving access to finance in small-scale farming is crucial for overcoming barriers to sustainable growth in this sector. Case studies and success stories highlight the effectiveness of certain approaches, such as the establishment of mobile banking services and tailored microfinance programs. Governments play a crucial role in creating an enabling environment through supportive policies and regulations. Collaboration among stakeholders, including governments, financial institutions, development agencies, NGOs, and communities, is crucial for the success of access to finance initiatives.